Hi guys, welcome back to my channel. This is going to be a very quick AMC technical analysis after the push-ups that we are seeing. So today we saw a decent push-up before it got rejected at the 2732 level. And what's odd is that we are seeing a little bit of a classic example of what is known as a shooting star candlestick pattern. Although nothing can be quite confirmed just yet, because a shooting star pattern needs to be confirmed by another downturn trend reversal candle before we can even say that yes, this is a shooting star. But that's generally how it works. So if you don't want to stay to the end, here's my analysis. I am expecting the price to come down tomorrow. The way I see this happen is that this is the retracement I've pulled from this last impulse wave till the top of this channel. The price tested the 0.236 today, exactly on the dot. Now, as you can see here, the price has flipped the 233 EMA and the 377 as well. So we would want to see the price come down, test this demand zone, and then try and move up and test that level again, right? And then vibrate a bit before trying to break up and test that zone. So this is sort of like the movement that I am predicting the stock to happen. Again, this is not financial advice, guys, but this would be the healthy movement according to me. If we see the stock might just run up completely tomorrow, but that for me won't be a healthy sign. I would want the stock to come down and test this supply zone, this demand zone, and flip these resistances properly, because we just blew through it, right? The previous day we got rejected, but then we just blew through it, and now we want to come down and test that zone. So that would be a 0.5 retracement as well on the dot. So that's around the 1950-20 range is what I am looking at. So that would be a healthy movement on the stock. Let's quickly look at a shorter time frame and see what kind of patterns we are forming, so that we can make a much more concrete decision on how we are going to trade this. Again, guys, if you guys are playing options, be very careful with what you're doing, because there's going to be some intense volatility in the coming days. So let's look at a 4-hour channel here. Although in the 4-hour channel this looks bullish, because we did get that after hours green candle, and it will depend on what happens in the after hours, in the morning hours tomorrow. But if we move down to a 1-hour chart, you can see that we are forming sort of a bearish pattern here, which is the broadening upward wedge, which essentially tends to break down below. That's essentially how this pattern works, right? So it would ideally break down before it tries to move back on up. So in very sort of small terms, I would like the stock to come down and test this this demand zone at a 0.5 retracement, or even a 382, right? So which is 20.5. So just establish that support, test that support, which would be the top of these candles here, and then make a push up and a decent run upwards. If we don't do that, in my experience, that's generally not going to be a healthy sort of price action, which is essentially what we got here in the March run up, right? Which is exactly what happened here. As you can see, let me just go down to the 4-hour. Yeah, there we go. So we got some really aggressive push-ups, and these kind of aggressive push-ups with the AMC stock without coming back and retesting. So it did try and come back and retest the 0.5 retracement, but could not hold, and it broke down. See what happened here? So although the only good sign here is that we did retest the 236 today, and then we got a little bit of a price action upwards, but that's too inconclusive. I mean, that's just one day, so we never know what's going to happen the next day. But in order for this price action to be healthy, guys, I would want the stock to come back, retest the 382 or the 0.5 on the daily time frame. That would mean that it would retest and re-establish these EMAs, which is the 233 and the 377. Remember, guys, the last time the stock flipped that was here, but then it tried to re-establish the support but couldn't, and it fell back down. So we would So this time the EMAs are much closer together, so that's much stronger than last time. So we would want the stock to flip this support properly and then move up. Okay, now let's take a look at a few other indicators just for our references. So let's take a look at the RSI. So as you can see here, the RSI is really high, right? So you would want a little bit of a pullback to at least test the 20-day moving average on this yellow line. That would essentially happen. So guys, here's my deal, right? So if you are holding options which are already 200, 300, 400, 500, maybe even 1,000% up, right? Get out of them. There is no point in diamond handing options. Do not give that money away to Citadel or anybody else. Get in again at cheaper prices when the price retraces back, tests the demand zone, and then tries to move out, which is essentially what's going to happen hopefully in the course of the next 2 days, if not more. By the end of this day, end of this week, I would expect the price to try and make a move towards this sort of holy grail sort of line, which is the major resistance that has been forming since the very first squeeze last year. So as you can see here, this is the line here. Sorry, my chart is a little bit complicated, but I'll do my best to show you guys. Let me delete these. So make it a little bit more clear of you guys to see. Okay, there we go. So you see, these are the two lines that we are sort of watching, the resistance lines. So you would want the stock to at least retest those lines properly, right? So we did retest this line, and then we are trying to move up. So it may just happen that tomorrow we just shoot up and try and break the $30 barrier before falling back down again. But in my opinion, that would not be a healthy way to go. We were also tracking this upward moving channel. So essentially a healthy price action after a breakout like this would be a retest of this channel before moving on. So that would be a healthy way of the stock to move, right? So that would mean coming back down to this 90, 19, 20 level. So which is essentially what I've been talking about. So there you go, guys. That's a quick look at the AMC's technical analysis. Do your own due diligence. Please do not consider any of this as financial advice. But if I were in your positions, if I were an experienced trader, I would look to play some puts tomorrow for the next 2 days. Just scalp them really quickly for the price whipsaw action down, and then try and get into some next week calls at a much cheaper price. There's no point in getting into the calls right now without because the IV is crazy, and if the price shoots up, this is going to be too difficult for you to get into that price again. So I would wait for the price to pull back down a bit. Again, I am super bullish about this. I believe at least till the ex-dividend date, the stock is going to move up and try and test the other sort of zone, which is 29.30 and maybe even higher, and push up till the top of this this March run, right? So 33, 34 is the max target before we see, by that point of time, the dividend would be announced, and we would probably see a little bit of a, like a price collapse before the markup actually gets established, and then the stock moves up. So that would be my way of trading the market. Again, this is not financial advice, guys. Hopefully you found this helpful. If you have any questions, let me know in the comments below and I'll try to answer it. And if you enjoy this type of content, give me a subscribe. I would appreciate it. If not, thank you so much for your support. Have a good day and happy trading.